Just can you tell us a bit more about how you got that number? Why are we still thinking that transactions might contract here for next year?
Sure. I mean, Yvonne, what we saw, what we expect to see for the full year for this year would be transaction volumes down about 25% for the full year. We had a strong start to the year. The year slowed down. We expect it to be slower at the start of next year, but then begin to pick up. So there's still positivity out there, but we've got a gap between buyers and sellers' expectations.
Okay, understood. Is there any specific part of the real estate market that, at least right now, stands out to you as perhaps it outperforms next year or does better than the rest? So we're talking, I don't know, logistics, office, what have you. Take your pick, Roddy. This is your expertise.
Sure. I think the key one that will stand out will be the hotel sector. We saw volumes in the hotel sector up by about 10 to 15% this year. We expect them to be up by around about 5-6% next year. Really off the back of what we're seeing globally with hotels. As people and countries sort of open back up, we've seen business travel come back, we've seen leisure travel come back. When that's happened, if you look at some markets in the States and elsewhere globally, we've seen RevPAR and also occupancy exceed the levels that they were at pre-COVID. So we're very positive on the hotel sector.
Roddy, what does it all mean for REITs?
Rich, I mean, I think it's positive in the longer term. I mean, I think the broader real estate sector, there's challenges out there at the moment. More longer term, I think across all of the sectors, we look at them pretty positively. I think in the short term, when it comes to the sectors that have positive sort of tailwinds behind them, whether that be data centers, logistics, multifamily as well, those will be the sectors to watch if REITs have exposures.
Okay, what about the vexed topic about property in China here? We've got a reopening story. That, of course, is going to be a bumpy road. How are you looking at things there? And, you can also split it between residential, commercial, and retail.
Sure. I think in the short term, there will continue to be challenges for China. I think with China opening up, hopefully, domestically, that will bode well for the retail sector. However, there's likely to be some bumps in the road if we have outbreaks of COVID, if there are any other sort of lockdowns. But that will bode well for retail. Similarly, for the office sector longer term. I think if we look more broadly at China, that opening up story is a really positive story. I think when it comes to the international investors, as I heard you mentioning the show earlier, we've definitely seen some distress in the investment market when it comes to China for the property sector. That said, that creates some opportunity for international investors that maybe have struggled with pricing in China to get into the market. So I think short to medium term opportunity for international investors. I think longer term, anything we see happening in the China property sector will be pretty orderly in conjunction with government policy.
Also, I mean, one of the big growth segments that we saw was really when it came to logistics, right? Part of it was due to COVID too, but in terms of growth in logistics and industrials, do you think that still has quite a bit of room for growth next year, or do you think that sort of trend is over?
When it comes to Asia Pacific, that trend has got a long way to go. I think the sort of key drivers of that sector, in terms of online retail, etc. When you look at the APAC logistics market, by 2025, it'll account for, in terms of revenue, it'll account for about 50% of the global revenue out there. So there's a long way to go, and we expect to see the sector. In terms of the new stock coming to the market, the opportunity there and the investable universe is going to grow considerably even within the next 12 months. So a long way for that to play out.
I want to ask you, Roddy, about Hong Kong office space, high end. I mean, keen viewers of our programs will notice the beautiful backdrop of construction right behind us. I want to get your sense really of, do we get the demand to come in and fill out the office space here in the city? Yeah. Particularly as, I guess, in some cases, people have, some companies have moved to Singapore or other places.
Yeah, I think, as we all know, for Hong Kong, we've seen corrections in the market over the last 3 years, with the troubles in Hong Kong, and then with everything we've seen with COVID. That said, supply is relatively tight, and we're now seeing the market turning. So I think when it comes to Hong Kong, that longer term story is positive, and I think that the opening back up of Hong Kong, we'll see people returning to the market that maybe we've been working overseas as well. And let's not forget, I mean, that the Hong Kong market has been, in terms of rentals, has been the highest destination for rentals globally. So in many ways, the correction that we've seen in rents actually may be useful for Hong Kong longer term in terms of affordability.
Ultimately, Roddy, we've got away from free money. We've got interest rates going up. How does that change the picture too?
One thing that has definitely changed the picture on Rish is the fact that if you look at the opportunities and where we're likely to see strong investment this year, if you look at the opportunities, Japan really stands out for two reasons. The fact that we still have cheap money in Japan, and that makes that sort of yield versus the cost of capital, that spread very appealing for investors. And let's not forget, we've seen a considerable correction in the currency as well. So for major international investors, where Japan is very much seen as a safe haven market in times of stress, which we're seeing now, and challenges, Japan will stand out for sure.
Final question. This is a very long report you guys have put out. Anything that we haven't talked about yet you think we should know?
I think it's pretty comprehensive. Everything that we've covered. I mean, I think there are other standout markets that I would pick for next year. Firstly, Singapore as a safe haven market as well, and the strong fundamentals that we're seeing there. And similarly, Australia. The cost of capital has gone up there, but just the low beta characteristics of Australia making that stand out as well.